Leverage is a big deal in closed ends, and it's important to understand it. Leverage is the process of borrowing at short term or at low rates and reinvesting at higher rates to increase your income and hopefully to increase your capital appreciation in a product. There's been some interesting trends with leverage. I mean, most funds borrow with short-term floating rate leverage. So there's a risk there that when rates rise, the cost of leverage will rise. Hopefully the investments they're investing in, the income will also rise. There's been a trend where some funds have termed out the leverage, meaning they've gone longer term leverage at fixed rates to try and mitigate that risk. And one of the other things I would point out is, in addition to increasing a fund's earnings and hopefully distributions, is that it would elevate the volatility in a product compared to a non-levered product. In the closed-end space, well over half of the funds out there use leverage. So it's pretty widely used in this space. And what are the upsides and downsides to that? Well, the upside is, if you're buying a closed-end for distributions and cash flow, it helps increase the distributable cash flow to investors. Kind of the downside is you'll have more NAV volatility. So if your investments are appreciating or going up, it will help on the upside. And if they're depreciating or going down, it'll be more volatile on the downside as well. And that's a big risk. Are investors aware of leverage in a product? I think most investors are aware of it. I don't know how deep they go in understanding the volatility. It definitely adds to it, but closed ends are a little bit interesting because the volatility really stems with the NAV performance, right? But in a closed end, it trades on the exchange, so you have market price volatility as well. And that's oftentimes driven by kind of emotions in the market and future expectations for an asset class or sector. So what's the profile of someone that wants a levered product? You know, it's interesting. I think it's someone that, you need to understand the risk of leverage and that adds more volatility, and you need to be comfortable with that. And if you're not going to be happy with extra volatility and you're going to watch the stock every day, you may want to go to an unlevered fund because you'll just feel more comfortable with less volatility. If you're looking for a higher income, I think, you'd probably gravitate towards a levered product. But there's different ways to approach it too. So if you go into a levered high yield product, that's certainly going to be more risky than a levered investment grade product or a levered muni product. So you can kind of pick your asset class and the quality of the underlying assets to try and balance out some of those risks.
For more information and data on closed-end funds, visit our sponsor, CEFConnect.com, the authority on closed-end funds. This is Closed-End Fund News.